everybody, welcome to my channel. My name is Justin. Thank you for joining me today. Today I want to talk about the oil tanker market, and specifically I want to talk about Scorpio Tankers. They had their earnings report this past week, so I thought it'd be a good time just to talk about them and the oil tanker market just in general. Guys, if you enjoy this video, please like, please subscribe. Really helps me out. Helps out the YouTube algorithm, puts this out to more people, and I personally appreciate it, so thank you very much. Now, if you've been following the oil tanker market at all this year, you knew it was very, very volatile. Back in March, the whole economy got shut down, so people were forced to stay home, people stopped driving, the airlines got grounded, the cruise ships stopped cruising, so oil consumption just shot straight down. Meanwhile, the oil operators were still pulling oil out of the ground at the same rate. They were still refining the oil. So we ended up running into a term called contango, where there was an oversupply of oil and they just didn't have places to store it. So they filled up all the storage on land, and then they started using these oil tankers to start storing the oil offshore. And this is a market that really has been down the last 4 years. But then they saw their tanker rates just shoot up very, very, very quickly, especially VLCCs, which are the largest oil tankers that are out there. And then around this time too, there's just a lot of hype around these oil tanker companies. So Jeremy from Financial Education came out, had a video about NAT, about he was investing in them. Just a couple days later, on Jim Cramer, the CEO from NAT, went on there on Mad Money and started talking about, oh, he's making money like crazy. He's never seen such a demand for oil tankers. So NAT stock alone jumped up almost double in about a 2-week period. So there are people that lost a lot of money and also made a lot of money during that time if they got out at the right time. So let's talk about Scorpio Tankers a little bit. So right now they're about a $500 million market cap. Their CEO is Robert Bugbee. And right now they have one of the youngest fleets that are out there among all their competitors. I mean, their ships are either 6 years or newer, which is overall an advantage for them. Now, something that's important to note is that the regulators started putting new rules and regulations on this oil tanker market beginning in 2020. So in 2019, they announced that these oil tankers needed to start cutting down their emissions, specifically on sulfates. So they had either two options. They could either, one, they could go install these scrubbers on their engines, which would reduce the emissions, or they had to start using this more expensive gas to power their tankers. And so most of Scorpio's competitors said, hey, you know what, we'll install some scrubbers, but we'll primarily use this other gasoline. We know it's more expensive, but the scrubbers cost almost $2 million a ship. So they didn't want to have that amount of expense up front. So they're kind of waiting things out a little bit, where Scorpio Tankers said, hey, you know, we're going to do it completely differently. We're going to get ahead of our competitors. And so what we're going to do is we're going to put scrubbers on all our ships. And so that's what they did. And they financed all of it as well too. And so they have really high leverage debt on their balance sheet right now. I think it's around $3 billion, where their liquidity right now is about $200 million. So they have about 15 times the amount of debt as liquidity. So it's something to keep in mind in this company in general. Something also that's interesting to point out about Scorpio Tankers is their market cap and their enterprise value. So their market cap's $500 million, as I said before, but their enterprise value is at $3.4 billion, so 7 times the amount of what their market cap is. So why is this? And this is actually might be value to you when you're actually looking at companies in general. If you see a company that has a really, really high enterprise value, that tells you automatically that they have really high debt and they have very low cash. So the market cap specifically looks at equity of company, where the enterprise value looks at cash, or factors in cash and debt as well into that valuation. So let's talk about Q3 earnings for Scorpio that came out this past week. So in Q3, they reported $177 million of revenue, compared to about a $346 million revenue in the previous quarter. So a significant drop off in revenue, and profits don't get any better, unfortunately. They had a a net loss of $20 million in the third quarter versus a profit of $140 million from quarter two. Now, if you look at their EBITDA, which pulls out interest, it pulls out taxes, and also pulls out depreciation. And keep in mind that Scorpio Tankers has a really high debt level, so they have a really high depreciation amount each month as well. So if you pull that out, they actually had a net gain. They had a profit of $80 million for the third quarter. So I've heard some people out there saying, oh, actually they were profitable. In my opinion, they weren't. You got to factor in the depreciation and the interest and the other stuff that goes into it as well too. So the only factor that I could really look at for quarter three that was positive is that they did pay down their debt a little bit, not by much, but at least it was something. Another thing too is to point out with these oil tanker companies across the board is that their book value is much higher than what their share price is right now. And usually that's a really good thing, but we'll kind of get into why that's not really the case right now with these oil tankers. But if you look at Scorpio Tankers specifically, their book value per share right now is about $36, where their share price, their stock price is at $9. So what that means is you're getting a 75% discount on the company when you're buying in. But if you look at all the other companies, NAT, DHT, TK Tankers, Frontline, Euronav, and all their book values are much higher right now. So that's a good indication that investors are not willing to put money into these companies at this time. Another thing that's really important too is when I was listening to the quarter three presentation that Scorpio Tankers put on, and Mr. Bugbee particularly said is that he kind of pushed off the low rates right now, and he said even though we have $200 million of liquidity right now, which is not a whole lot. He didn't say that, but he was kind of referring to that. They don't have a high amount of liquidity, but going into next year, even if the rates stay low, they're still projecting to have $100 million of liquidity on the books. And I thought that was kind of interesting because the rates continue to go down. They're becoming less and less profitable. They have only $200 million on their books right now, but they're saying they're going to have $100 million by the end of next year. So I started digging into their quarter three earnings report that basically goes in sequence with their presentation. And in there, if you read it, how they're going to get to that $100 million number is that they're just going to finance everything. So they're basically going to take on debt to have liquidity, which is not a good thing, and it's not a good way to run your business. But it's the choices they've already made in the past of putting the scrubbers and leveraging debt, that's just kind of where they're at right now. So guys, let's kind of talk about the short-term and the long-term outlook of the oil tanker market just in general. And to be blunt, the short-term, it looks really bad. Rates have continued to kind of go down throughout the year. Another thing is that there are operators taking advantage of this downtime and less oil consumption. So they've shut down the refineries and doing maintenance. So they're not producing and refining as much oil as they were before. Also wanted to take a look at what the oil consumption is and what projections are going to be over the next year. And so I looked at the IEA report. So they come out with that each month. This is an organization that looks at the monthly oil and coal consumption, and then they also do a projection out over the next several months on where things are going to be. And so for the October report, they came out and said that there's only going to be about a 6.5% increase of production for oil going into 2021. So right now we're producing about 91 million barrels of oils a day, and then they're projecting to only produce about 97 million barrels a day. So again, that's only a 6.5% increase. So that's not very much. So that doesn't make me very happy about or wanting to buy into these stocks anytime soon. So let's kind of talk about long term and what that kind of looks like. And guys, it actually gets really interesting. So the oil tanker market is very unique and different from the rest of the market. So where there are other companies or other industries that have certain cycles, like for example, I own an agricultural company and they're very seasonal. So maybe one year the crops that are planted are there's an abundance of those, so they buy their product and they do very well. Where there's other years maybe the weather was bad or something happened, and so farmers aren't producing as much crops or not planting as much crops. So there's definitely a cycle and seasonality to that aspect. Where the oil tanker markets, they have these things called super cycles, and the reason why they're called super cycles is that their price goes up really quick from their tanker markets and also their share price. So literally, a tanker company could be producing $100 million in 1 month, and all of a sudden the next month they're producing $700 million of revenue. So it's a very quick jump. And so my personal opinion is that we're moving that direction. Now, I don't know if that's going to be a year out. I don't know if that's going to be a 5 years out, but we're getting closer and closer to that next super cycle. And so what drives, what are the factors for that? Well, simply put, it goes back to supply and demand. So what happens is as fleets get older, ships get older, these companies scrap them. And so as they scrap them, they put more orders in for new ships, and these new ships take a while to build, right? So they don't place an order and then a month they go pick them up. They take, months and months to build. I mean, they're big pieces of equipment. They're very technology driven, and they're complicated. So it takes a while to manufacture these and design them and make them. So it takes a while to get them while they scrap these other ships. And so all of a sudden, if there's any kind of influx, an increase of production of oil, all of a sudden there's less ships. The fleets are smaller out there, so they can actually drive up shipping rates. Because right now, I mean, there's a number of different companies in that arena, so they have to keep their rates low to stay competitive. Well, if there's less ships out there, they can raise their rates because there's a higher demand. And so right now, historically, this is some of the oldest fleets that we've seen. I mean, if you look at NAT alone, I mean, a lot of their ships are not just 15 years old, but 20 years old or older. And it comes to a point where, oil companies won't even talk to or use some of the oil tankers if they're over 15 years old, if they're over 20. So these oil tanker companies have no choice but to scrap these old ships and then buy new ones. And so so I think it's really important to look at what the scrapping percentage was right now. And I looked at it this morning, and right now, as far as ships being scrapped, it's the lowest in the last 10 years, the lowest. And so I think what's happening is that companies are looking at the economy right now, and they have no clue what the revenue is going to be in a year. They have no idea what even it's going to be in 2 years, even what's going to be in 6 months or 3 months. So all of a sudden, if there's a vaccine, if people feel more comfortable driving, traveling, that sort of thing, all of a sudden oil production is going to go up and the rates can go up, and they'll get back to kind of normalcy, and we may even see a short period of time, point in time where tanker rates really shoot up. You never know. So I think they're kind of holding out. They're being precautious, unlike Scorpio Tankers, who's just going out there and spending money willy-nilly at this point. But, if you had to press me and if I had to pick one company to invest in, my personal opinion would probably be DHT. They seem to have, the best valuation. I like their management team. Scorpio Tankers really scares me. And I'm not really sure about their CEO. I think either you like him or you hate him. And, there are more videos on Robert Bugbee than any other CEO that's out there in the oil tanker market. I mean, you can go on YouTube and look him up, and he's all over the place. And when I first started listening to him, I thought he was really brilliant. He was a smart guy. He seems to be maybe even ahead of his competitors. But I don't like how he's running his business. And I don't think you should be running it by leveraging debt as much as he has. And if there's not a super cycle in the next 18 months, this company's really going to be hurting because they're just going to keep going more and more debt. And I do think that banks are going to allow them to kind of restructure their debt, maybe push out their debt longer, maybe change interest rates, whatever the case may be, because banks don't want these tankers. What are they going to do with them? They get cents on the dollar for them, so they don't want them. So I'm sure they're going to work with Scorpio if that had to come to. But in general, I'd be very, very wary of Scorpio Tankers, and it's kind of a high risk, high reward type scenario. So if you're a gambler, You know, it might be worth it to gamble on these guys, but you know, my pick would be DHT if I had to. And right now, I'm not doing anything. There's just too much risk out there. I just can't determine where the economy is going to be in 3 months or 6 months. But I will be keeping a close eye on the scrappage of these tankers, because I think that'll be a good indication where things are going in the future and when that next super cycle is going to happen. So guys, if you enjoy this video, please like, please subscribe, really appreciate it. Thanks again for watching, and you guys have a good day, and God bless to you.